How can you create financial freedom in just 10 short years? Now, that might seem like a big goal, but it's actually possible given the right factors. And here's what they are. Okay, so how would you love to create financial freedom in the next 10 years? Not 30, 40, 50 plus years out like your financial advisor says, but in 10 short years. Now, I'm here to tell you, it may not happen that quick for some people. Sometimes it can go faster, sometimes it can take longer, but I'll tell you, a lot of our clients that have hired us, 10 years is pretty realistic. And here's the process we take them through to actually do that. All right, so let's talk about this financial independence, right? Like, how do you become financially independent in 10 years? First and foremost, to become financially independent, you have to make sure that whatever streams of passive income or investment income is coming in, that's going to exceed whatever your monthly expenses are. So if you're spending $10,000 a month at home, you need at least $10,000 a month to be able to be financially independent, right? You may not be financially free, but you'll be independent. Now, if you're $5,000 a month, then you only need $5,000 a month, and so on and so forth. I have some people tell me that, Chris, I don't have millions of dollars like some of your clients have. Is this really even possible for me? And my answer to them is, well, yeah, it can be. Because, for example, this one person that asked me, she said, Chris, I don't have a lot of money. I don't have millions of dollars lying around like some of your clients do. What do I do? And I told her, I said, well, listen, you've got money available. You've got things like land and things like that we could be selling off to then use that money to invest. And your burn rate, your expenses, are only $5,000 a month. Where some of these people with millions might want $20,000, $30,000 a month, it's actually tougher to hit. Your number's smaller, you might be able to get there faster than some of these people that have hundreds of thousands, if not millions of dollars. And guess what? When we did that first step we're going to talk about here, which is like that launch pad, that first step, that's when we discovered she could actually do it faster than most of our clients within just a few short years. Not 10 years, but even shorter than that, about 3 to 4 years. Now, here's what you need to do. That launch pad, that first step is you got to know where point A is. If you're trying to get from point A to point Z, what you got to do is you got to know what point A is. Where am I starting from? What do I have available to me? A great starting point for you, if you want to learn how to do this, and this is really the action I'm going to give you in this video, is go to moneyripples.com, try out the passive income calculator. Right there, when you go try to fill out all the information in the calculator, make sure you fill out all completely inaccurately so you get an accurate number. But you put those numbers in, you'll find out that there's a certain amount of cash flow you could create in the next 12 months. And so that's what we have our clients do, is we want to see the whole picture. We want to see where we're starting from, what money is actually liquid and available. For example, what do you got in savings, CDs, money markets? What do you got in maybe even life insurance that you haven't been doing anything with because you were just told to let it sit there till you retire or whatever? What about old 401ks? Not the current ones, not with a current employer, but old 401ks or IRAs, Roth IRAs. Annuities, you have annuities. Do you have like money in equity in your house or in rental properties too? Maybe your rental properties aren't paying you as much as they should be. All of these things, when we figure out like what kind of cash you might have available to work with, then that's the money we can actually get out. And so that's what that launch pad is really what's that starting point compared to where the goal is. So if your goal is $10,000 a month, what do you have to start with right now? Then we go to the next step, which is explore. We got to explore the opportunities. So once our clients get that point, we realize, hey, we've got cash we can start using. Maybe you've got this IRA money. Well, we can actually self-direct it. You can do what's called a self-directed IRA, where you get to choose what you invest in. You can take that money and invest in certain things. Now, there's certain investments that work better than others. So we might say, well, given this situation with your IRA money or this old 401k, these would be better. But with this other cash, you might want to do this over here. And then that's where they start to explore options. Now they can look up their own options. Many of them actually use our own network because there's people I've vetted over the last several years. Doesn't mean that it's always going to be 100% risk-free. That's never the case, right? But I've got my own network that they can borrow as well. And so they might start talking to some of these people or other types of companies and real estate investors that they could put their money with. And that's where they start to explore those options. Now that leads to the third step, because once they get to that point, they've started to explore, then they start to commit. Now they start to get their money with these investments. They start to, whether they're buying turnkey rentals or whatever it might be, whether they're trying to buy things like into syndications where they pool money with other investors, whether they're lending their money to real estate investors where they have to pay them interest just like they're the bank. You become the bank when you lend your money to them and they have to pay you. And if they don't, the property is yours. Just like if you have a mortgage and you don't pay the bank takes the house away from you. You can do the same thing, right? There's so many things you can invest in. You can, by the way, invest in different warehouses and things like Amazon works out of and other types of companies. You can invest in apartment buildings and office buildings and self-storage units and even car washes and things like that. You can be invested in so many different types of deals that your financial advisor will never let you understand or even offer to you, because they can't legally sell it to you, because they can only sell you mutual funds and stocks and things like that. And so you get to explore those options, and then you start to commit, saying, all right, I'm going to commit X amount of dollars to this one, X amount of dollars to this one. And you start to figure out, do I want growth? Do I want cash flow? You get to figure out, like, what do you want to get? Most of the time our clients say, I want the cash flow. I want the income coming in as soon as possible. And so then you commit into that. Now, while you're starting to do that, we also need to make sure we protect you too. Because you can't just have a good offense, you gotta have a good defense, right? We can't have one big event in your life take it all away, all that hard work you've done, to just be swept away in one instance. Whether that's the death of a family member, whether that's medical issues and things like that that happen, whether that's lawsuits, whether that's things that might, you may never know what will occur. We gotta make sure we protect against those things. And so we start to set up things like insurances and make sure you have trust, and even make sure you have a good CPA to protect you from getting overtaxed and things like that. All these things to protect your wealth as you're trying to grow it. And then that leads to my fifth and favorite step, which is the income avalanche, right? As you start to have that money paying in, you can now take that money and invest it back out again. It's not like that compounding interest that everybody talks about, where you just let it sit there, you set and forget it, and hopefully it compounds over time. No, we're compounding your income, because every time you get that income coming in, you're able to then turn it back around and invest it again to create more income. And so that just grows year after year after year. So I'll give you an example. I had one client in 2019, he only had $250,000. So it wasn't like he was rich. It wasn't like he was raking in the dough, but he had $250,000 in mutual funds. Now, he was kind of wondering, it's like, well, is the stock market the place to be or not? He decided he wanted to get his money doing something else. So with that $250,000, he went and did different real estate deals. And with that, that started to build and grow. Now, here's the great thing, guys, is that his income now is $3,500 a month, but he had even had hiccups along the way. For example, there was a situation in 2020 where his industry shut down for most of the year. He was pretty much jobless for more than half of 2020. That also happened again in 2023 when there was a strike that went on in his industry, so then he was out of work again. But during that entire time, guess what? That passive income was coming in to help support him and his family. So even then, and he had, of course, he had emergency savings, because we make sure we keep emergency savings in place too. That was barely even being tapped into, because the other income coming in was able to provide for them. And so no, it wasn't like a perfect straight up line, because obviously there was times he didn't have income, he had to live off that income. But he still was able to progress to the point where now he's looking at about the next 2 years, he will probably hit his goal of $5,000 a month, which is what he wants to hit. And that's what he wants to achieve. Your goal might be $10,000 a month. Again, some people are like $20,000 or $30,000 a month. Whatever that is, we got to work towards that. And the key to doing that is how to make sure we game plan it the right way, so that we can get you there step by step, little by little, so that you can progressively get there. So let me give you an example. Say that you have $500,000 you have to work with today. Your goal is $10,000 a month. Well, that $500,000, say that you only make 10% with that money. That makes $50,000 that next year. So now you got $50,000 to add to your $500,000. That $50,000 now makes 10%, right? Now you're at $55,000 a year. And guess what? You're going to reinvest that $55,000. And guess what? Again, now you're going to have about over $60,000 a year coming in. Then you're going to do that again. You have $66,000 a year, and you can go in again. And you see how this kind of compounds and grows to the point where you eventually get to that $10,000, or really, in that case, the $10,000 a month, or $120,000 a year. Now, it could happen in 10 years. It depends on what we do. Sometimes we might buy some things that might grow more so that you can get the cash out later to then eventually reinvest and be able to make more money. And so we try to diversify and do different things that way. Again, a lot of different details and nuances, all depending on what your situation is. But that's the key, is that you want to compound that income year after year. And that doesn't even include if you have additional savings you're already putting away. Because what if that person that was making $50,000 a year from their investments that first year was also saving $20,000 a year? Well, now they got $70,000 to work with. That adds not just $50,000, but now they go up to $57,000 a year. And then they use that money, and then it goes up to over $65,000 that next year, and so on and so forth. And so that's the thing. You can compound it faster depending on what you're doing with your money, and especially if you're being held accountable along the way and always kept in check to make sure that you're on target. And that's the one thing we love doing consulting. So I just say this: if you want to figure out what you can do at least in the next 12 months. And by the way, sometimes some people actually will do this passive income calculator on our website, moneyripples.com, and they'll find out they can actually hit their income goal in the first year. Some people even realize it might take 2 or 3 years, but they're really close even in that first year alone. My recommendation is go to moneyripples.com, try the passive income calculator, fill it out completely and accurately to see what your number is. And if it's good, we should be talking to see how we can actually help you achieve that. So go do that today.